If you ask anyone who the best investor in the world is, people like me will probably mention the name Mackenzie Bezos, who is the former wife of the second richest person in the world, Jeff Bezos, the founder of Amazon, with whom she recently successfully divorced when Amazon stocks were at their peak in 2021. For saying this, I will surely be cancelled. Anyway, the second person that comes to mind is the legendary investor Warren Buffett, who is 92 years old. Because there really aren't many people in the world, many investors who have sustained an average annual return of around 20% for over 40 years. Actually, there aren't any. Recently, the traditional Berkshire Hathaway shareholders meeting took place in Omaha, where both billionaires, 92-year-old Warren and 99-year-old Charlie, answered all the questions and expressed their views on all the important global topics. What is their opinion on the end of the American dollar? What do they say about the American banking crisis? What is their view on the trade war between China and America? Investors were also concerned whether these two investors were overdoing it with their huge investment in Apple. They were also asked about their personal dispute with Elon Musk. Simply put, when Buffett speaks, smart people listen. The whole meeting lasted over 5 hours, and I guess most of you didn't watch it in its entirety. But I did because I don't have friends. But I have you. Let's get to it. Hello, we are InvestGuide, and welcome to another investment video. One of the first topics discussed was the world's de-dollarization, which refers to the loss of the dollar's position as the global reserve currency, the most important currency in the world.
My question for you today, how is Berkshire prepared for this possibility? And what can we do, as American citizens, to attempt to shelter ourselves from what's beginning to look like the beginnings of de-dollarization?
Buffett's response was very long. He spoke for about 5 minutes. If I were to summarize it in some way, he said that these things are essentially unpredictable. And the closest answer would probably come from the chairman of the U.S. Federal Reserve, Jerome Powell. He also mentioned that by the time you can somehow recognize these things, it's usually too late. He also answered that Berkshire Hathaway is not prepared for a dollar collapse because, again and again, you cannot prepare for these things. Munger added at the end that, yes, printing new money will eventually come back to haunt us, America, in the future, but nobody knows when that moment will come. The next question was directed at the ongoing banking crisis in America. Perhaps you have already noticed that several relatively large banks in America have already failed, and several other banks are currently facing significant problems, causing their stocks to decline.
Some of the banks that you've sold include USB, Wells Fargo, Goldman Sachs, JP Morgan, PNC. Should we think that they're banks that aren't well run because you've sold them? Or?
No,
okay.
no. But I did think that banking could get in a lot of trouble just because of the kind of things that I didn't like the banking business as well as I did before.
As you saw, Buffett sold almost all of his banking stocks in his portfolio. He kept only 2 banks, and one of them is Bank of America, which I also have in my portfolio.
I think that the incentives in bank regulation are so messed up.
As you have heard, Buffett no longer trusts the banking sector. He is bothered by how things are set up internally and the fact that people who should be punished for the things that are happening, even now, are not being punished.
And so many people have an interest in having them messed up. It's totally crazy. I mean, you'll have to have a punishment for the people that do the wrong thing.
And of course, he said that this situation will eventually lead to a big problem. And Munger just added the finishing touch to it.
I don't think having a bunch of bankers, all of them are trying to get rich, leads to good things.
It sounded a little bit like both old gentlemen stopped being fans of the old banking system and maybe started believing in Bitcoin. But no, of course, I'm just kidding. We all know what their opinion on Bitcoin is.
Sometimes I call it crypto crappo, and sometimes I call it, crypto shit.
Buffett and Munger agreed that at least in the short term, the future doesn't look completely rosy for the USA, and we should expect lower performance from value investing than usual.
I think value investors are going to have a harder time now that there's so many of them competing for a diminished bunch of opportunities. So my advice to value investors is to get used to making less.
However, Buffett adds that investment opportunities have always been and will always be here. And that is for one essential reason.
What gives you opportunities is other people doing dumb things.
Buffett then talked about how he is absolutely certain that the crisis that occurred in 2008, a crisis caused by the bank's misconduct of lending mortgages to almost anyone, will be repeated in the future. He mentioned that he will definitely be on the other end of the phone, receiving calls just like back then, waiting for good opportunities to provide cash and buy stocks at discounted prices. It was also discussed that to be a good investor, one must understand people. You need to understand their psychology, where they spend money, and how they behave as consumers. Buffett further emphasized this point, as some investors were concerned that Apple stocks now constitute more than 35% of Buffett's Berkshire Hathaway portfolio.
If Warren and Charlie can comment.
I'd like to make one comment first. Apple is not 35% of Berkshire's portfolio. Berkshire's portfolio includes the railroad, the energy business, Gratimals, you name it, See's Candy. They're all businesses. And to think that a criteria for Apple is different than the other businesses we own, it just happens to be a better business than any we own. And we put a fair amount of money in it, but we haven't got more money in it than we've got in the railroad. Our railroad is a very good business. It's not remotely as good as Apple's business.
As you heard, Buffett doesn't hold back on Apple stocks and outright says that it is probably the best business they have in their portfolio. Buffett first bought Apple stocks about 5 years ago. By the way, when he was buying, Apple stocks were at their peak, and he bought them at a price-to-earnings ratio of 17. And, of course, his investment has appreciated by hundreds of % over that time.
And I don't understand the phone at all, but I do understand consumer behavior. And I know how people think about whether to buy a second car. I know how they go out to different... We own auto dealerships. We're learning all the time from all of our businesses. So See's was a sort of breakthrough, but we just keep learning as to more about how people behave and how a good business can turn into a bad business and how some good businesses can maintain their competitive advantage.
Okay, Apple is undoubtedly one of the best businesses in the world, but what about its current prices? Is it a good investment? If we look at it, since the beginning of the year, it is up by more than 35%. Moreover, in the latest financial results, both revenues and earnings per share exceeded expectations. If we examine the intrinsic value of the stock using the DCF model, we calculate the fair internal price we are willing to pay for the stock. Assuming future growth and discounting at 10%, which is essentially an average, the fair internal price for purchasing Apple stock today would be around $156 per share, which is approximately 9% lower than the current prices. Therefore, Apple is currently slightly overvalued. Personally, I have Apple in my portfolio with an average purchase price around $138, and at today's prices, I wouldn't buy more. I would wait for it to go lower. In any case, you can perform a similar calculation with any stock you want to invest in, and I highly recommend it because without such calculations, investing in stocks is simply gambling, which doesn't pay off in the long run. If you want to use my spreadsheet directly, it is accessible to all members on my Patreon. Take a look there. Buffett was also asked about his thoughts on the escalating tensions between China and America, whether it's due to the fall of the dollar or their trading practices. China is a rising superpower and so on.
There's been some tension in the economic relationship of the United States and China. I think that tension has been wrongly created on both sides. I think we're equally guilty of being stupid. There's one thing we should do, it's get along with China. And we should have a lot of free trade with China in our mutual interest. It's just so obvious. Everything that increases the tension between the two companies is stupid, stupid, stupid. And ought to be stopped on each side. And each side ought to respond to the other side's stupidity with reciprocal kindness. That's my view.
As you can see, the banker clearly stated that mistakes are made on both sides, and it would be better for the whole world if both powers could get along and learn to live and trade together in some way.
It creates one enormous problem, of course, which is that you have the two superpowers of the world, and they know they have to get along with each other. Either one can destroy the other, and they're going to be competitive with each other. But part of it, always in a game like that, is trying to judge how far you can push the other guy without them reacting. You know, if either side is a bully in some ways, they can get away with it to an extent because the alternative would drive them both into destruction. You know, it's one of those game theory dilemmas. Keeping either side from trying to play the game too hard and thinking the other side will go along. It's like playing chicken, you know, and driving toward a cliff.
By the way, Buffett sold all of his investments in China and is currently not invested here at all. The next question was about Elon Musk because everyone knows that both sides had some disputes in the past.
Yes, I think Elon Musk overestimates himself. But he is very talented, so he's overestimating somebody who doesn't need to overestimate to be very talented. He would not have achieved what he has in life if he hadn't tried for unreasonably extreme objectives. He likes taking on the impossible job and doing it. We're different. Warren and I are looking for the easy job that we can identify.
Yeah.
In this response, you can beautifully see what both gentlemen are actually focused on. Their main goal is not to lose money in investments. They invest in things they understand and seek maximum profit with minimal risk. On the other hand, Elon Musk is the complete opposite. He is an entrepreneur who takes enormous risks and tries to change the world through his business, pushing the boundaries of what is possible. Buffett and Munger are not interested in that at all. Buffett is over 90 years old and has experienced a lot, so at the meeting, he was also asked about his life wisdom and what he has learned, and what advice he would give to younger generations.
I've never known anybody that was basically kind that died without friends. And I've known plenty of people with money that have died without friends, including their family.
We can probably all agree that the world would be better if we were kinder to each other. However, unfortunately, the media and social networks tend to go in the opposite direction. The biggest attention is given to reactions, negative news, and of course, gossip and disputes. And such content is more rewarded because it ultimately interests people more, which is a shame. If you want to learn more about investing, I'll be looking forward to seeing you on my Patreon. And if you want to know exactly how the financial scams in The Wolf of Wall Street happened, which you probably don't know, check out this video. Take care.